Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to cover AT&T. This is the big communications company. They had their earnings release for full 2022 today, and I wanted to cover this company, do a full analysis, and go through my investing process. Let me get into AT&T. I like to scorecard my investments, and it involves 4 questions followed by a decision. First, do I want to be in the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? Am I getting a discount on the stock? Based on those 4 questions, I then determine, should I buy more shares, hold, or sell my position in this particular company? So AT&T announced their earnings for full year 2022. And I wanted to evaluate the income statement, balance sheet, and statement of cash flows. Overall, the income statement, one thing to note is their revenue dropped, but their profitability stayed about the same. When you come down to operating income, keep in mind that they had a huge impairment because they sold the DirecTV business, and they basically took a big paper loss on that investment. Therefore, they took a $27 billion impairment loss. It's a paper loss. So they just had to get that off their books, and that really doesn't affect cash. So really, when you look at the $4.5 billion loss, if you take the $27 billion out of it, they're somewhat in line with the operating income that they had in 2021. Moving on to the balance sheet. The balance sheet looked good. They sold off the DirecTV business, so some things changed. For example, total current liabilities went down significantly by 50 billion, and then long-term debt went down from 151 billion to 128 billion. Very good move to see their debt going down and the company be more focused on the communication side of the business. The statement of cash flows, my favorite statement of all. It looked good, and they also guided that they're going to produce more free cash flow in the future. But as you can see, 2022, that big impairment comes back. See how we saw it in the income statement? It's coming back here. And really the cash from operations is at 35.8 billion, just a little shy of where they were in 2021. And then capital expenditures are deducted from that number to get our net free cash flow number. So when earnings were announced, the stock went up 6.42%. I think it's faded down to about 5% gain today. So the street really liked the numbers they saw. I think everybody likes that the focus of AT&T now. This is, I like to say, a boring stock that makes me a lot of money. It pays me a high dividend, and now it's beginning to really appreciate. In fact, let me show you a different graph. This is the 12-month chart. And over the last 12 months, really, it's been a modest gain overall. But really, if you started investing in mid-2022, I believe this was October 10th, if you had bought at that moment and held the stock, you'd be up 37%. So really, active value investing is about really knowing companies, knowing when there's a very good buy, and then really looking for a very good purchase price. You know, Warren Buffett likes to say that it's silly on Wall Street, where comparing that to a department store sale where they put all the merchandise on sale, on Wall Street, when they put all the stocks on sale, everybody runs out of the store. So look at good quality companies, wait for them to go on sale, and then buy them. And then you can get a really nice return in the near term and the long term. Now let's update the intrinsic value of AT&T. Given that they have a greater cash flow expected, I'm using my cash flow model that basically takes the expected free cash flows from AT&T and discounts all those free cash flows that we expect in the future to today's value. The company guided that in 2023, they're going to have $16 billion of free cash flow or better. So that's a very good guide. So we're going to have that be our starting number. I'm going to have conservative growth rates of 4% and 2% to grow years 2, 3, 4 at 4%, and then perpetual growth at 2%. The FinBox weighted average cost of capital, I took the moderate range there of 10%. And based on that criteria, my model computes that AT&T is worth $189 billion, but the market cap currently is $137 billion. Therefore, it has about a 38% discount. So that's a nice discount on a company that pays a high dividend and really good sound numbers. Now, on the debt to EBITDA ratio, their debt to EBITDA ratio is 3.14, almost hitting that 3x mark that I really like. Very close. AT&T is getting very close to that number, so their balance sheet is improving. So the performance, revenue did decrease by 10% in 2022, but the company remained profitable, and they're so gigantic that if they could just grow a little bit each year, that'd be fine. They just keep paying that big dividend. Their price to earnings ratio, 7. In Q3, they generated $10 billion free cash flow, a market cap of $137 billion. So their yield is 8.46. Dividend rate of 5.79, very nice dividend. In guidance for 2023, the number of subscribers for both their wireless and then the high-speed fiber is really gone up. And I forgot to mention that in the cash flow statement, that their capital expense is going up because they're putting in a lot of fiber lines. And that's good because they're going to get these new subscribers and just have that annuity type business where those subscribers just build the AT&T revenue. It's great that they're focusing on the core business, and again, they guided that they're going to have $16 billion or higher of free cash flow. My outlook, this is a good upside with a good dividend stock. I think today, when it went up 6%, I think a lot of people are beginning to believe in AT&T, and it should be a popular stock going forward. So let's revisit the scorecard. First, is it an industry I want to be in? Yes. This is the only communications company I own in my portfolio. I like having a nice, stable industry like communications, where it's just a steady Eddie kind of stock, pays a good dividend. The company now is focused on communications and being operated well. I'm going to give them a check mark on debt because they're so close to 3x EBITDA. And you're getting a discount on the stock. Therefore, I'm going to buy additional shares of AT&T, not today because it's up 5-6%. I'm going to wait for it to dip, and then I'll continue to buy on dips. Thanks for watching the video. I really appreciate it. I hope you found something new about AT&T that you didn't know, and I hope you found the video interesting. Keep in mind, I'm not recommending you buy AT&T stock. I'm just sharing my experience as a small investor in AT&T. Thanks again for watching. Good luck investing in 2023.